What is going on, everybody? Welcome back to yet another video. In today's video, I'm going to be discussing liquidity. What is it? How do we identify it? And how can we base trades off of it? As always, if you guys find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Alrighty, so let's start off first with what is liquidity? Liquidity is essentially orders that are being filled inside of the market. It could be buy orders, it could be sell orders, it could be stop orders. But essentially, liquidity is where orders are being filled in the market. If no orders are being filled, there's no liquidity. So if people are buying long right here, that is creating liquidity. If people are selling short right here, that is creating liquidity. If there's no orders, there's no liquidity, the market's not going to move. Now, being able to identify liquidity can help us identify high probability setups. Now, there's many different ways that you can identify liquidity, some of them being previous highs, some of them being previous lows, support and resistance, session lows, session highs, overnight lows, and there's so many different ways that you can identify where these liquidity zones would be. So let me show you a few examples on this chart right here. That way it can help paint a picture on how you can identify liquidity. So looking at this chart right here, there was liquidity right above this high point right here. Again, previous day's highs can be a point of liquidity. As we can see, price broke above, failed to break above. We're going to come back to this scenario a little later, but price swept the liquidity up here and then had a nice drop to the downside. Looking at price action today, this was another area of liquidity. Again, this was the high point right here. Price ended up breaking above it, but this time it gave a continuation. If we're looking right here and we're not paying attention to the overnight highs, well, this was the daily high on ES today. This is a spot of liquidity. As we can see, price broke above it, it was able to push. Looking at the 5-minute time frame over here, we can see that price bounced right here, and bounced right here. This would be an area of liquidity, and if price were able to break below it, it would run stops. Reason being, imagine you're a buyer who went long here, or a buyer who went long right here. As price came down to this support zone, you notice that it bounced twice before, and you went long on the third one. Where's your stop loss more than likely going to be? Right below this low point right here. So people have their stop orders sitting right down here. And if price were to drop below that area, it would start hitting stop orders, therefore creating liquidity. Looking at this high point over here, this would also be an area of liquidity as this is the highs. Imagine somebody ended up getting short up here or getting short here or getting short at this lower high over here. Where's their stop loss more than likely going to be? Above these high points right here. As we can see, price tried to break the high, couldn't hold it, ran the stop losses. Again, people are getting short. Where's their stop? Above this high. Ran the stop losses, created liquidity, and ended up pulling to the downside. So being able to look at previous high points is going to help you identify liquidity. Again, high point right here, price ran the stop losses, ended up dropping to the downside. High point right here, price ended up running the stop losses, ended up dropping to the downside. You can do the same exact thing looking to the downside. As we see right here, price had this low point right here. If people are getting long here, or maybe even here, where's their stop loss more than likely going to be? Below this low right here. As price ended up dropping to the downside, it ran the stop losses, creating liquidity. And as we see, price had a nice push to the upside and push right back up into this area right here, and then running the liquidity to the upside and then dropping back down to the downside. So if you're looking at previous highs and previous lows, previous days highs, previous days lows, you can even use the overnight session high and lows, or just strong areas of support and resistance in general, using the hourly time frame, the 4-hour time frame, 30-minute, 15-minute, whatever it may be, to find your support and resistance points. You need to have an area of interest to understand where could liquidity potentially be. So that is how you're going to identify the overall liquidity. Now, how are we going to be able to find high probability setups using liquidity and liquidity sweeps? Again, being able to understand where the stop orders are going to be hit, or even buy orders, because you also got to imagine it like this. Like, yes, there's going to be people that have their stops above here, but there's also people that like to buy the breakouts into new highs. So if we're looking at this liquidity sweep right here, imagine you ended up getting short right here. Where's your stop loss more than likely going to be? Right above these highs right here. So those people that have their stop losses get swept right here because price came up, broke through it, hit the stop losses. But also there are breakout traders who are buying that new high, and as price comes back and fails the breakout, their stops are going to be hit. So now you have both sides of the market being stopped out. And that's personally what I like to look for when it comes to liquidity sweeps. So we can actually use this for an example. We can use the replay mode on TradingView. So we have this high point right here. As we see, price just kind of consolidated from the previous day's lows. It ran this low liquidity sweep over here. So actually we can replay it a little more. So the previous day's low point right over here, as we see, price ended up dropping to the downside, Now again, people who have their stop losses below this low because they were getting long got hit. There's people who like to short into the new low, and if price reclaims it, what is more than likely going to happen? They are going to stop out of the trade. So this is where the people who are shorting at that new low are stopping out at the reclaim. And as a result, we could get long with a stop loss right below these lows right here. So if we pull up the long position, say we just got long right there, our stop would be right below these lows right here. Ideally, what are we going to be aiming for? The session highs. Obviously, this is in hindsight because we already know that this ended up happening, but you could also take Fibonacci retracements and use those as price targets as well. There's many different ways that you can identify price targets in the market, which is a whole different topic for an entirely different video. Anyways, we get long at this liquidity sweep right here, stop loss right below these lows, and as we can see, price ran all the way up into this liquidity up here. So now if we go on over to this liquidity right here, again, the session highs or the pre-market highs right here, price ends up pushing to the upside, taking out the liquidity, and as price fails, that is when you could get short with now your stop loss right above these highs up here. So if we put on a short position right there, stop loss is going to be right above those highs. Again, there's multiple different ways that you can find price targets. You could use the Fibonacci for price targets. You could aim for the session low over here. I actually forget what ends up happening. But as we see, price ends up dropping to the downside and dropping all the way down to those lows over there. Also, what you can do is you can break it down to smaller time frames and identify even better entries using intraday setups. So that's just one example right there. Let's see if we can find another one. Here's a really good example over here. As we see, price sets these highs over here, dips to the downside, comes back up, and then fails the breakout. So if we just use the replay mode on TradingView and we go forward, as we see, price ended up hitting the stop losses, creating a liquidity sweep. So people that maybe that got short here, keeping a stop loss right above there, and then also people getting long into the new high. What ends up happening, these people end up getting liquidity swept, and the people that buy into the new highs as price fails, they're going to sell as well. This creates a high probability short position. So if we just put on the short position, say we got short right there, stop loss would be right above these highs right there, and I already forget what price actually ended up doing, but you could be aiming for all the way down there. Maybe you can use Fibonacci retracements to identify your price targets. If you guys do want a video on how to identify price targets, definitely leave a comment down in the description, and I will be doing that in the future. But we could also be aiming for Fibonacci retracements. Say we just got short right there, and let's do replay mode. As we can see, price already dropped a substantial amount to the downside, all the way down to 45.92 from an entry of 46.0475. So that was another example. Let's see if we can find one to the downside right here. As we can see in the overnight session, price ended up setting this low point right here, set another low point right here, set another low point right here, so a support area. And then as we see, price ended up dipping below these low points right here, more than likely hitting stop losses. And then people who are trying to short below this low, as it reclaims, they're getting stopped out. As price starts to reclaim the area, that's when you can go long with your stop right below this low. Maybe you got long on this candle, maybe you got long on these candles right here, or maybe you even waited for a pullback to then get long, as we see, which ended up happening right here, and price continued to push to the upside. They're pretty much just support and resistance areas, but you're able to identify where orders could be potentially getting filled. Now from there, what we are looking for is a failed break of that support or resistance zone, as a result creating liquidity. As that happens, that sets up for a very high probability trade in the opposite direction. Now for me personally, I like to look for a little more confirmation before entering on a liquidity sweep. So if you guys would like to see a video on that, definitely make sure to smash that like button and comment down below letting me know that you would like more of these kind of videos. As always, everybody have an amazing rest of your day, and I'll see you guys in the next video.